I basically live on crypto, and therefore people ask me a lot of questions around crypto all the time. Specifically, I got a very detailed set of questions yesterday because I was featured at a event about AI, and AI has so much to do about the future and how we make money, because I am very convinced that AI will unfortunately replace a lot of us, and therefore we have to look at new ways of generating income for ourselves. I am someone who lives the crypto lifestyle, and that means that 95% of my financial life is tied towards crypto and also DeFi. And if you want to know more about that, learn a little bit about how I do things, there is an address blended in here. Crypto.lifestyle is my landing page. Make sure you join me so you can also start your journey at your own pace. We will cover a good amount of questions in today's video, and I believe those questions will be close to your heart as well if you are considering getting into crypto, specifically now at a time where everybody talks about Bitcoin and everybody's really interested, ranging from countries, Fortune 500 companies, and also presidents, nations, what have you. Everybody wants to talk about crypto, and therefore we jump straight into our questions. The first question that was submitted to me was, how volatile is global crypto to potential growth in the event of a global economic downturn? That is a great question, and undoubtedly, crypto is linked to the macroeconomic situation in the world. Therefore, if the world's economy is going down, yes, crypto is also going down. That makes sense, right? There is, however, a topic that is way more important when it comes to crypto, and that is the 4 year cycle that is tied to Bitcoin, Bitcoin being the father of all crypto. So, what does that mean? In phases of 4 year cycles, Bitcoin alternates between what we call a bull run and a bear market. In the bull run, Bitcoin's price appreciates, means it goes up, and in the bear market, Bitcoin's price goes down. Typically, it goes down to the previous cycle high. So, what we want to do as investors, one approach that you can take is to try and time the top and the bottom, understanding that you can never get it fully correct and pinpoint it to the day. But as long as you are somewhat in the right field or area of the top and the bottom, what you can do is you can buy your Bitcoin cheap and then you can sell it when the price is high and continue doing that throughout the different cycles. That is an approach that is very valid. It's not the only approach, however. There are also people like myself who consider Bitcoin such a good investment that they just never want to sell their Bitcoin again. And instead of selling it off at the top of the cycle, we apply different strategies where we maybe start a phase where we either accumulate more Bitcoin or we start using advanced strategies that where we can borrow against our Bitcoin holdings. That really depends on your very individual situation, especially also on your time horizon. Do you see crypto as something that makes you a fast buck over the course of the next 3 months, which is foreseeably the remaining time we have in the current bull run? Or are you like me and Bitcoin as a means that can create generational wealth for you over the next 5 to 15 years? It depends on your age. Are you someone who's close to retirement, or are you someone who's just about starting their adult life and you have a way here that can guarantee you to become a multimillionaire in the future with strategic investments. All of this I teach, of course, in my course. I have a community where every day I deliver updates. But let's try and answer this question here a little bit more detailed. And I have a chart that I'm going to share with you right now. And what you will see, it's called the Bitcoin Rainbow Price Chart. And it is one of the safest ways of navigating those cycles. What you will see in that price chart is coloration. And at the top of let me just bring it in instead of talking here in theoretical ways. Okay, so here it is. At the top, you have this red band, and that signifies, you see the legend is there. It says maximum bubble territory. Sell, seriously sell, right? So ideally, you keep your Bitcoin until we get into red or dark orange territory, and then you sell off your Bitcoin. And then we are also, of course, down in the purple and the blue and the green. That is when you should accumulate Bitcoin, buy it, or hold it. And as you can tell, and let me make this chart a little larger for you right now. As you can tell, on the right hand side where you see my mouse, that is where we are right now. So we are, according to this strategy, we are still in the phase where it is still cheap, where you're supposed to accumulate your Bitcoin. Now, if you look at this chart in a closer fashion, you can see that we have these halving events here that also very direct the price of Bitcoin. So here and here, and we actually had a halving event not too long ago that was here. So the halving event is an event where the Bitcoin miners, they get less Bitcoin as a reward for their work, and that is part of the Bitcoin equation. That is very important. In this video, I do not intend to explain the specifics of that, but what I want you to see is that Bitcoin goes through these cycles where we have price accumulation, price growth, and then it goes down again, then it goes sideways, goes up, down, sideways, up, down, sideways, up, down, up, down, sideways, and now here we're in the up phase, right? The reason why these movements become less abrupt over time is because this is a logarithmic scale, meaning here, as we move farther to the right hand side, the distance is worth more money. So here you can see one band here was only worth 10, then this step is worth 90, and then from this step we get to 1,000, 10,000, but then we have a huge jump to 100,000, and the next jump takes us to $1 million per Bitcoin. By the way, according to this chart, this would show us that sometime around the year 2028, or let's just round it up, 2030, Bitcoin should at some moment of its cycle hit that $1 million mark. So it is up to you now to decide, are you going to have a long-term vision, or are you going to try to squeeze as much profit out of each cycle as possible? Or, and that is also a very valid approach, are you going to use a hybrid strategy where part of the funds are allocated to buying Bitcoin, which you never sell, and the other part are allocated to doing more advanced things? You're either trading or you're doing something that I love doing, and I'm quite frankly a master of doing, and that is providing liquidity for the markets where I collect the fees. And by the way, if you want to learn how I do that, how I cash flow, using that strategy, you know what to do. Go to crypto.lifestyle, join my mailing list. So hopefully this answers the question. Yes, there will be ups and downs, but bottom line is that Bitcoin has historically increased by 115% every year. And as we move forward, as we progress, as this asset becomes more mature, yes, there will be diminishing returns, but we are still far away from that being so small that it's insignificant, right? Anyone who watches this video will likely not even live up to that time. You may have come across the name Michael Saylor. He is someone who operates a Bitcoin strategy in basically professionally and also takes on other people's money, and he calculates the projection at a very conservative 25% compound annual growth rate. But I will tell you, in the next 5 to 10 years, that is much more likely to be closer to 100%, meaning you double your money every year, than 25%. The 25% compound annual growth rate is just an average. Now, important, if and when, because that is coming for sure, we will have a bear market year, the amount you have invested in Bitcoin will reduce during that year, or the total value of that. By how much, that is really left to be seen, because historically Bitcoin's value has gone down up to 50, 60, 70%. But I personally hold the belief that because this asset has matured so much and we have so many institutional players who have invested in it, specifically in 2024 and 2025, I do not believe that the correction will be as harsh anymore. I do think that we can still see a Bitcoin going down by 30, 40%, but I don't see the 60, 70, 80% anymore. Of course, nobody can foresee the future, and I don't have a crystal ball either. But I have a feeling that the Bitcoin correction will definitely not be as large anymore as it used to be in the past. And that just is an indicator to me to allocate more money towards the holding strategy, where we just keep our Bitcoin for the long run. But again, there's all types of strategies we can apply, and it does not have to be either or. It can and should, in my opinion, be a mix. Okay, so let's move on to the next question. Some analysts point to political bad actors who are creating a monopoly of crypto. What is your opinion of how this might impact regular investors? This is a very interesting question, because if you think about it, crypto was designed and invented for people to be sovereign, for the people to have the money, for the people to control the money. Because if anything and anyone has a monopoly on money right now, it is the fiat money. It is the dollar, it is the euro, because we typically have one Federal Reserve Bank or one central bank that has the power to decide to print more money just out of thin air. And then we, the people, we have to pay for that debt that typically is used to fund wars and to also help large corporations when they mess up. I would say that the idea of Bitcoin and the idea of other cryptos goes precisely in the direction of making sure that there can never be a bad political actor that has a monopoly over money. Do politicians now realize that Bitcoin is at a point of no return? Do they want their piece of the pie? Do they want to also make sure that they are part of a generational wealth transfer and not miss the boat? Of course they do. Politicians now buy Bitcoin. Companies, nations, countries now buy Bitcoin. But 99% of the Bitcoin has already been mined, and Bitcoin is in high demand. So there is not going to be any politician or any country that is going to have a large amount, enough of Bitcoin to be in control. As a matter of fact, the person or the company that holds the most Bitcoin is actually, besides the creator of Bitcoin, which is this person which we call Satoshi Nakamoto. But besides him, which we do not expect Satoshi Nakamoto to sell any of his Bitcoin, but besides him, it is Michael Saylor with his strategy, which is company called Strategy or MicroStrategy. He holds, I believe, up to 3% of all the Bitcoin in circulation. And he's very clear about the fact that he will continue buying Bitcoin. But it is only 3% of all the Bitcoin in circulation. Is it a lot? Yeah, for sure. It's definitely not a little bit, but it is still small enough where he definitely doesn't have the power to take over the world. Now, maybe what you heard when it comes to politicians and creating a monopoly of crypto, maybe you heard about CBDCs, Central Bank Digital Currency, meaning we use the technology of crypto and the workings of crypto and we apply them to an idea of central banking, which basically is how we've managed our world's finances over the past century. And that is something that we do not want, because it would be digital money that is used to control our every move, because then the central bank would know exactly where every dollar is located, how we spend every dollar, who pays us dollars, and that is something we do not want. And I'm happy to say that the current government here in the United States has actually laid out a legislative framework that forbids CBDCs. In Europe, the situation is slightly different. We actually have the European Central Bank publicly admitting to wanting to institute a digital euro, which would be a CBDC. And they have also admitted to the digital euro being policed and controlled. So hopefully people will be educated enough to not buy into that, to not fall for that, because what they're going to try to do is give you small incentives in return for your freedom and your financial sovereignty. We don't need to look for a solution. The solution is already here, and it is called Bitcoin. Yes, there are many other cryptos, and they all play an important role in the crypto ecosystem, and I believe in a number of them. But Bitcoin is truly what will give you financial sovereignty, what will give you a generational wealth. I do not think that this train can be stopped anymore. It is, however, very important that you learn and understand how to exercise self custody. That means the Bitcoin that you purchase is in your wallet. You have custody over your Bitcoin. There are very strong tendencies right now where, for commercial interest and for business interest, we have a lot of centralized exchanges, such as Coinbase, such as Binance, all the big exchanges you know of. They want you, of course, to keep your Bitcoin within their framework. You will see in a few years' time, every bank, most likely the bank you bank with, will offer coin accounts. And they want you to keep the Bitcoin in their accounts, which is not self custody, it is custodial. So, for financial sovereignty to work and for this brilliant idea of the people's money to work, we need to actually hold our Bitcoin in our own wallets. That is very important, and it's also something I teach. The reason why that is so important is once you have self-custody over your Bitcoin and over your crypto, you can now partake in what we call decentralized finance. And in decentralized finance, there are very lucrative and interesting fair investments that are accessible to everyone and anyone, which is something that in traditional finance is absolutely not possible, because the most interesting investments are actually reserved for accredited investors, meaning people who already are multimillionaires. And basically, the banks and the powerful and the rich, they want to keep those investments to themselves. Crypto changes that. And this is why it's so important that everyone knows and understands what Bitcoin is and exercise a self-custody. Don't keep the majority of your Bitcoin on centralized exchanges. So hopefully I've answered this question enough and you understand now how much potential there is in Bitcoin and also in self-custody. The next question is crypto income federally taxed? The answer is yes. Assuming you are referring to the United States, crypto income is federally taxed. However, okay, so this is not tax advice. This is just something I know that I share with you, but you have to confirm that with your CPA. But in most legislations around the world, when you borrow money, that is not taxable income. Very few know that you can actually borrow money against your Bitcoin holdings. As a matter of fact, if you do it in decentralized finance under self-custody, you don't have to even ask anyone for permission. You just show, I have Bitcoin and I can use it as collateral to borrow against it. Very powerful. Just some food for thought. The other aspect of this is if we start using Bitcoin the way it ideally was intended, meaning as tender, as a form of payment between individuals and businesses, if we pay each other in Bitcoin, then in my opinion, again, check this with your CPA, but then there is no taxable event because you never sell your Bitcoin off to convert it into fiat. So say, for example, you have something to offer, you want to sell your car and you accept Bitcoin for it, then I can send you Bitcoin, you accept it as form of payment, and you give me your car in return. There are more and more businesses accepting Bitcoin, and there's very powerful ways also to use Bitcoin directly to buy gift cards and then use those gift cards or prepaid debit cards to pay for almost anything you can think of. So, crypto is federally taxed, and crypto income, if it is a capital gains taxable event, is taxed, but there are ways where you can be smart about it and make sure that your taxable income is as small as possible. This, by the way, is not an illegal activity. It is, in fact, something I would say that is a duty for a well-informed citizen of a nation. There are also countries, by the way, where there is no tax on crypto at all. I'm thinking Dubai, I'm thinking some other countries around the globe. But for those of you, by the way, here in the United States, you as a US citizen will always have to play by US rules no matter where you live. So keep that in mind. Great, next question. Is it possible to move retirement funds into crypto? Yes. So the regulation is being laid out here in the United States to actually allow for 401k to harbor crypto, to store crypto. Most likely, the easiest way for you to invest in crypto and have it part of your 401k is via crypto ETFs. So it is not truly holding the crypto, but you're using financial vehicles, you're using funds, ETFs, to invest into crypto. So it's indirect crypto holding. It's better than nothing at all. The other way, if you truly want to hardcore directly move your crypto into retirement funds, it is not easy yet. You would probably have to build what is called a self-managed trust and find a company that manages your direct crypto holdings in a self-managed trust fund. It is possible, but it is slightly difficult to navigate. I'm sure that'll become easier and easier as we progress. I will, however, tell you the best way to hold your crypto is in self custody, and probably also outside of the confines and the highly regulated space of retirement accounts. Because, in my humble opinion, a retirement account is just a sneaky trick for the government to have too much control over how you hold your money and what you do with your money. It's essentially the government giving you little bits and pieces of carrots, and in return, you have to play by the rules. You have to wait a certain age and this and that. Yeah, this is an ideological conversation. I'm not saying don't leverage the possibilities of retirement funds, but I'm saying is don't be too crazy about it. Be more in love with self custody and financial sovereignty than you should be in love with moving crypto into retirement funds. But long story short, it is possible. It is actually increasingly easier to make it happen. There's also companies out there that actually specialize on Bitcoin IRA accounts. Just do some research around that. I, for myself, I'm not interested in that. I'm happily paying my tax now in return for freedom. That's just my opinion, but I understand that not all of us are in the same situation. Last question that was sent in to me, and a great question as well. Can crypto funds be assigned to beneficiaries after my death? If so, how is that accomplished? If not, what happens to those funds? It's a great question. The problem has not been eloquently solved yet because it is an industry that is in flux and in evolution. However, there are solutions there already. Of course, if you hold your crypto via one of the crypto ETFs, then the situation is much easier because that investment is part of your regular estate, of your regular wealth, and it can easily go through the pathways of inheritance. Where it gets more complicated is if you hold it in self custody. So far, I have revealed two different approaches that I believe are pretty solid approaches to handling this situation. The first approach is that you have a attorney or a person of trust that holds something very vital to accessing your self custody crypto, and that is a seed phrase. In crypto, he who owns the seed phrase to a wallet can have complete access of the crypto funds and also owns the crypto. So it's very important to protect that seed phrase and don't give access to it too easily. But if you have a will and if you have a trusted executor of your will, whether that is an attorney or a person of trust that has or at least knows where to access your seed phrase, should there be something that happened to you, then the executor can go ahead, access the seed phrase, and then give access to the seed phrase to whoever you designate. It is important to not directly give access to the seed phrase, but you could, for instance, have it encrypted somewhere or have it in a vault and then In the case of something happening to you, the attorney or the person of trust would then get access. I'm sorry. Would then get access to your seed phrase and make sure the funds are dispersed accordingly. So that's the first solution. The second solution, there is a hardware wallet out there. I would have to research the company that offers those, but essentially they offer a service where you pay a small subscription, I believe, and then in case you pass away, they hold the seed phrase on your behalf. And then I think there's a waiting period of between 6 and 12 months. And you have, of course, to prove that the original holder is deceased. And you also have to be named beneficiary during the holder's life. And then after 6 to 12 months, the manufacturer of that hardware wallet will give you access to the crypto funds. There's also a third option, by the way, which is a pretty advanced way, which I believe most of you will not be in that case, but that is if you hold your crypto within a trust fund. A lot of you who maybe have a larger estate to manage, and also you will basically know what a trust fund is for. And yes, of course, the crypto can also be managed within the trust fund. What happens, by the way, if something happens to you and you have not prepared one of these alternatives to pass on your wealth? The short answer is the crypto is gone. The crypto is highly secure if navigated correctly, and nobody can ever recover funds without a seed phrase. If the seed phrase is not there, the crypto is lost. By the way, a large amount actually of Bitcoin is lost or inaccessible forever. So that's just kind of part of how crypto works. So hopefully I have answered a good amount of questions that you have. What is important for me is that you start your journey now. You don't have to jump headfirst into crypto, but start getting educated and dip your toes into crypto. Start small and then scale up. But I'm telling you, there's amazing ways to tap into what I think a one in a lifetime opportunity to be part of a wealth transfer where we move from traditional ways to the blockchain, and there's tremendous benefit to be gotten from that. There are also ways, if you educate yourself, because of DeFi, where you have access to very lucrative investment vehicles, albeit high risk vehicles. I think that is a given. But if you know what to do, and I can actually teach you that, then you can have amazing cash flow from your crypto holdings. To the point, depending on the size of the budget you can allocate to it, to the point where it would give you financial freedom, meaning you passively make enough income to cover all of your expenses, and anything you earn in your job or from your business is just the cherry on the cake. Great. I hope this answers so many questions to you that you've had on your mind. Please, if you have additional questions, put them in the comments, because that is the best type of content, the content that where I just glean from your questions, know what you are really interested in. For now, I will stop this video and I will see you in one of the upcoming videos. Thank you so much and goodbye.